Coming up on Market to Market, NAFTA partners send different messages on trade policy. Blessed with more rain, water slashes its own path out west. And a family business pours it all into home delivery. Those stories and market analysis with Elaine Cubb next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, February 17 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Last month's warmer weather encouraged a few more trips to the local diner and a fill-up or two at the local gas station. In January, retail sales moved 0.3% higher as more Americans had a night out on the town. Stops to refuel on the way were tempered by the fact there were fewer new cars in the gas line. Without the reduction in auto sales, retail numbers grew 0.4%. And annual inflation rate, a number used by the Federal Reserve for making decisions about lending money to banks, hit 2.5%, the highest increase since March of 2012. Among the trade deals President Trump has targeted for dismissal or destruction is the North American Free Trade Agreement. Paul Yeager has our report on this week's event surrounding the 24-year-old trade deal.
Canada's Prime Minister visited his country's largest trading partner this week. Justin Trudeau was welcomed to the White House by President Trump, while Canadians fear a renegotiation of NAFTA and the impact on their economy. Trudeau stressed their profound shared economic interests as they met for the first time. More than 75% of Canada's exports go to the U.S., mostly in oil. 18% of U.S. goods head to Canada. Canada is the top destination for goods of 35 U.S. states, and more than $2 billion in two-way trade moves across the shared boundary every day.
Millions of good jobs on both sides of the border depend on the smooth and easy flow of goods and services and people back and forth across our border.
We have a very outstanding trade relationship with Canada. We'll be tweaking it. We'll be doing certain things that are going to benefit both of our countries. It's a much less severe situation than what's taken place on the southern border.
While Canadian leadership has played it cool, Mexican citizens are not. Protesters, 20,000 strong, marched in Mexico City, demanding respect for their country and its immigrants in the face of hostility from the leader of the free world. The president claims the U.S. is on the downside from the other country in the North American Free Trade Agreement. Trump has called for a bigger border wall with its southern neighbor and Mexico to pay for it, a claim Mexican presidents past and present have denounced. In response, a Mexican senator introduced a bill this week to switch the source of their imported corn from the United States. U.S. corn's second biggest foreign destination is Mexico at 23%. According to the Mexican government, more than 3/4 of their country's exports head to the United States.
You got to make sure that what you do, that there's no retaliation against American agriculture, because American agriculture is the only segment of the economy where we have a positive balance of trade.
12% of U.S. ag exports go to Mexico.
Agriculture is kind of like a locomotive for everything else that's going to be pulled behind it.
For Market to Market, I'm Paul Yeager.
Higher than normal rainfall has been a blessing and a curse for parts of the parched West. In California, just 70 miles north of the state capital, this embarrassment of nature's riches continues to be a runoff nightmare. John Torpy has the details.
Residents of one California town have found new ways to worry over a body of water in their backyard. Once a drought-ravaged puddle, Lake Oroville in Northern California was on the brink of breach this week as a constant stream of drought-busting rains pushed the Golden State's largest dam to a weakened state. Already struggling with a large hole carved out of the dam's main spillway, those tasked with making repairs were delivered more bad news as rushing water began eroding an earthen auxiliary spillway. As a result, Lake Oroville officials drained roughly 20 feet out of the reservoir to relieve pressure on the dam brought by recent record rain and snowfall. Repair crews used helicopters hauling rocks to shore up the spillway. By Sunday, officials at the dam hope to have the lake level drawn down by 50 feet, making room for more rain predicted to fall this weekend. Almost 200,000 people living below the dam heeded a mandatory evacuation notice as the flooding emergency began. However, the order was later changed, allowing people to return to their homes. State water officials say while the most critical danger has passed, residents of the agricultural area known for rice, fruit, and nut production should remain cautious. For Market to Market, I'm John Torpy.
According to the USDA, the number of dairy farms has steadily declined over the past 40 years. Rising costs forced many operators to cash in their chips. However, the owners of one dairy operation were undaunted by the prospects of the future and stepped outside their comfort zone. Delaney Howell has this update on a cover story from last summer where one family poured it all into an unconventional business plan.
Home delivery used to be all in a day's work for milk processors in the United States. While the practice has pretty much fallen out of favor, the service has become the key to the survival of a century-old Missouri family farm.
My dad had 3 girls, how unfortunate, I guess, but he taught all of us girls to take care of the cows, milk the cows. He said girls could do anything guys could do.
In the mid-1980s, the farm, now known as Chateau Dairy, was at a crossroads. Milk prices were too low to make a profit, and a decision had to be made on whether the Osborne, Missouri farm should be sold. Barb and Leroy Chateau eventually came to the conclusion the best way to turn a profit was to take out the middleman between the bulk tank and the table.
We came up with the idea to actually sell directly to the consumer and build a bottling plant here on site, a bottling plant, a cheese and butter room. So we approached grocery stores in St. Joe and Kansas City and actually finally got them to buy into the idea of having a local family farm deliver milk, farm fresh milk to their stores in glass bottles.
Unlike many larger-scale dairies, the Chateaus approach milk production in a more traditional manner.
Instead of using hormone to make them produce more milk, we did the other side of feed and pedigree of the cows to produce more milk, just more on the natural side of it.
Milking is a round-the-clock operation done in 2 to 3 shifts by 11 of their 48 employees. The crew starts at 2 a.m. and finishes at 2 p.m. every day. One of the keys to their success has been the use of glass bottles. The nostalgia factor, along with increasing shelf life to 17 days, has helped bring customers through the door.
In the glass bottle, you don't pick up the plastic taste. You can recycle the bottle, and most importantly, glass keeps milk colder. And milk lasts longer when it's very cold and kept like 36, 37 degrees.
Getting customers turned out to be easier than the Chateaus imagined. They began with a mom-and-pop approach to marketing and soon found word of mouth to be all the advertising they needed.
So it was all an educational thing, and we realized people wanted to come to the farm. So then we started doing tours at a very small scale, and now we see about 190,000 people through every year.
Originally, the dairy offered white, chocolate, and strawberry milk. Now, the Chateau Milk Company produces 8 varieties of milk and, depending on the day, puts up to 6,000 gallons of cold, fresh, hormone-free milk into 10,000 bottles. The company has 4 varieties of ice cream, 3 butter options, and 4 different types of cheese curds. Holidays and special events also bring unique flavors to Chateau, including a bright blue French vanilla milk to honor the 2016 opening day for the Kansas City Royals baseball team. The products are sold in the Chateau Milk Store on site and at 75 to 80 local Missouri grocers, coffee shops, and restaurants, as far north as St. Joseph and as far south as the Kansas City metropolitan area. In October of 2015, the Chateaus decided to embark on another project and started delivery directly to the doorsteps of customers in Kansas City and the surrounding suburbs under the name Chateau Home. Leroy and Barb's son Matt quit his corporate job after nearly a decade and returned to the farm to start the new division.
We've had customers asking for the Milkman to come back to Kansas City for about 7 years, and all throughout the time we thought, you know what, number one, we don't have enough product, number two, we don't have enough time to do something new, right? As we talked about it and we did research, we were prepared to start it at any given moment. When I came back, I thought, you know what a great opportunity to both build on the brand that we've already created with Chateau Milk Company and also provide our customers with something that they've been asking for a very long time.
The return of the old-fashioned milkman has been good for business in many ways.
The Baseline Company is about the idea of nostalgia and bringing back what was once, in vogue. These delivery trucks and a milkman says nothing more than that. It talks about a time in which things were much more simple, and when you had a milkman that whistled as he went down the street and got to know every neighbor that he delivered milk to. And so we thought that was just a baseline good extension of our normal brand.
And the milkmen get additional benefits that go beyond completing a daily task.
I actually thoroughly enjoy meeting the customers. Even though I'm here early in the morning, every now and again I do get the rare occasion to meet a customer. I have a couple routes where the kids come out and they actually like giving me hugs. I don't know, maybe it's a thing, hugging the milkman. I talk with my grandparents. They always remember the milkman coming. Even my in-laws and my parents, they remember their parents talking about the milkman. So it is kind of fun to kind of bring back those memories for everybody.
The Chateaus began with a pilot program in October of 2015. But after some 5,000 customers registered, they decided to go full steam ahead. Since its inception, the company now reaches about 25% of the 6,500 customers demanding their products. Along with dairy, Chateau Home offers nearly 550 local products from Kansas City entrepreneurs.
We thought we would have about 10 to 15 suppliers. We now have about 20 to 25. We test them for quality. We want to make sure that we have the top of category. They're all exclusive to us from a home delivery standpoint. And I don't know, we feel like it's a great opportunity to really promote local and to kind of debunk this conversation that local is 250 miles away.
The Chateaus are continually looking for ways to upgrade their products. They have entered numerous contests and received various awards. The couple uses the judges' feedback to help improve the quality of their family-focused brand.
We just found out that our butter was one of the top 10 in the world. We also were the small business of Missouri about 5 or 6 years ago and got to go to Washington and found out we were one of the top 3 in the country. So we do enter because we want to see how we stack up to our competitors and other people so we can learn and get feedback and make things better.
Ultimately, all members of the Chateau family agree there is one element they can identify as the key to their continued success.
Our story is being local, providing a yummy milk for kids and adults. We want milk to be fun for people, not just something that your mom makes you drink when you're growing up.
For Market to Market, I'm Delaney Howell.
Next, the Market to Market report.
A slowdown in fund buying coupled with a strong South American harvest put pressure on the grain markets. For the week, March wheat lost 8 cents and the nearby corn contract fell 6 cents. Good weather and the start of the seasonal shift to other ports of call dropped the March soybean contract 27 cents for the week. March meal lost $2.50 per ton. In the softs, May cotton lost $1.57 per hundredweight. Over in the dairy parlor, March Class 3 milk futures fell a penny. The livestock sector remained mixed as the April cattle contract put on $1.78, March feeders added $2, and the April lean hog contract shed 30 cents. In the currency markets, the U.S. dollar index gained 16 basis points. Crude oil lost 46 cents per barrel. COMEX gold gained $3.20 per ounce. And the Goldman Sachs commodity index lost less than a point to finish the week at 402.8. Here now to lend us her insight on these and other trends is one of our regular market analysts, Elaine Cubb. Elaine, welcome back.
It's great to be here.
Excellent. But before we get started, you can listen to our market discussion anytime by downloading our market analysis podcast on our website, iptv.org/MTOM. Now, Elaine, we had a great run up in the wheat market over the past 2 weeks. This week looked like we maybe hit a ceiling. Are we just undergoing a correction here in Chicago wheat, or is this the start of a new downtrend?
I think it would be appropriate to do a correction. I mean, if we were going to look at the rally leading up to this, why did that happen? We have a fundamentally very bearish market. I think the correction mostly happened on Friday here, and that could just be a function of timing. We're going right into a 3-day weekend where you have a lot of this investment money that has come into commodities and grains simply because these funds that have been making money hand over fist in the stock market need to put that money somewhere, need to diversify it, need to get it arranged around their portfolio. I think that is probably what drove a lot of the money into the grains and commodities in general this past week and past couple of weeks, and then some profit taking here on Friday.
Okay, you know, it's interesting. You mentioned that speculative purchase of commodities. I believe I saw a report this last week that the speculative hedge funds are the longest they've been in commodities, including the metals and crude and all the grains. The largest long they've had in, I think, 10 years. So they have made large purchases.
And oil especially. There's been a lot of focus on oil, and whether that's perhaps even some defensive bullishness trying to maintain that strength that oil has seen. We really don't have a rally on the oil chart. It's really kind of flattening out here, so we'll see if they can make that momentum continue.
Okay, well, talking oil leads us to talk gasoline, which leads me to think about ethanol. We have seen incredible grind in corn for ethanol. We've seen absolutely a very strong demand for this old crop corn market. We were really trying to move this thing higher. Old crop corn, where do we go from here?
Old crop corn, again, I mean, I think it's hard to I mean, you make the demand case, and the demand case has been strong, more than 1 million barrels per day, or gallons per day being produced of ethanol the past several weeks. However, inventories are starting to really rise there. So I think there's danger that you could have a correction from that sense, from the energy sense. And certainly there's danger that you could have a correction in the corn market just generally, because again, supply-wise, that is a bearish situation. So I think we are fortunate to have seen that rally churn as high as it has. Old crop-wise, though, I mean, we're certainly competitive on a global stage, but there is risk.
Okay, so do you want to be making some, if I've got a lot of corn sitting in the bin from last harvest, should I be getting some unloaded here north of 350 on the March contract, or do I continue to hold and wait for a little better prices later on?
You know, basis-wise, we have seen basis soften quite a bit out in the country, just even this past couple of weeks, since the first of the month, because of the transportation issues in the western United States. Rail, even in southern United States, has seen some problems. So I think that has really weakened the basis, which makes me want to say that this is probably not an ideal time to be moving cash grain just to spot it out at the elevator. So you might, if you can keep it in condition, find better basis opportunities as we go farther into the spring and summer, just depending on logistically what you can do. And if you want to be bullish on prices, there's probably more convenient ways to do that.
Okay, new crop corn, we ran up against that $4. We broke through it. Are we going to make another run at it, Elaine Cubb?
Well, probably. I mean, seasonally, it would be very unusual to have posted an annual high in the December corn price chart in February. That's very unusual. It's much more likely to see that April, May, June timeframe. But we don't really have any reason to believe that at this point, long-term weather range forecasts, we don't have any reason to believe that yet. We're not worried about drought necessarily in the Corn Belt. So I think we have to be aggressive with our spring seasonal sales. And certainly I'm confident there are people who can look, even here at $3.97 or whatever the price happens to be, they can look at that, take their basis off, calculate their break-even costs, and they will be making a profit in 2017, even here in a February price. So be looking at that.
Okay, let's talk soybeans. Soybean market, old crop again, volatility is the name of the game. And is that funds coming and going? Is it a fundamental factor? What's happening?
There is a fundamental factor if we look at the Malaysian palm oil market, which really fell apart here at the end of the week, Malaysia has raised their export tax for their palm oil, and I think that really spooked the market. And if that's what has been supporting the bean oil, then we saw bean oil really fall apart below 33 cents here on Friday. And if that has what has been supporting the soybean prices to some extent, I think they followed along. I think that's where the volatility is coming from those outside markets.
Okay. We've got a question here from one of our followers, Phil, up in Ontario, Canada. Phil is asking, how do Chinese soybean prices compare to those here in the U.S., and is soybean demand there insatiable? So we look at this new crop. What's the headline coming out of China?
Insatiable is a pretty good word, I think, especially because they very deliberately intend to, they know that they rely on the Western Hemisphere, whether it's from the U.S. or perhaps from Brazil and Argentina. They know that they are not intending to produce their oil seeds domestically. They very purposefully source those from the Western Hemisphere. However, the headlines coming out of China this week would be bird flu is on the horizon as a real possibility of something that could damage their livestock sector, damage their feed demand for soybean meal.
Okay. How long until we understand the impact of that bird flu epidemic?
That's a great question that I don't have an answer for you. I mean, that's a really good question. Even if it was, even in Europe when this happens, it's hard to get a handle on. And when you're talking about data coming out of China, it's even harder to really get a read.
All right, we'll talk pork market in a little more detail later, but do you expect this bird flu issue to help find some more export demand for U.S. pork?
Yeah, I would love that to be the case. I mean, I hate to wish that upon any producer anywhere, but I think that's something that we should be watchful for.
Okay. Well, since we're talking livestock, Elaine Cub, let's talk about this cattle market. You're up there in South Dakota. You see a lot of cattle producers. What should we anticipate going forward on live cattle?
I would love to see live cattle prices rally, and I'm a little puzzled why they haven't. When you look, even like the beef retail prices are really quite cheap. Relatively speaking, this is 3-year lows. Nothing else in the economy is at a 3-year low, right? We've seen the stock market rallying so much. We have so much optimism about consumer spending in the economy. Why hasn't the beef retail market for beef prices reflected that? Why haven't we seen consumers, even in the restaurant level or the grocery store level, gone in and started buying up these meat prices? I mean, people are making money in the beef industry. This is not a disaster, and prices didn't fall apart this week. We were quite stable in the cash market. I mean, this is not a complaint, but I think that a case could be made that the beef market itself, the cutout, should be moving higher.
Is it just a function of massive supplies coming at us? I mean, weights are relatively current. Are we just up a lot on numbers?
I was going to say, I don't think we make a bearish argument about supplies because the weights are actually running below last year at this time. So I don't feel real bearish about supplies.
So if I'm thinking about that, I'm watching the economy. Do I hold off pricing out into the deferred months and wait to see if maybe grilling season, it's 75 degrees in the Corn Belt here at the middle of February, kick this thing off and try to get some demand? Or do I hedge my bets right in here at 114, 118 and lock in some pricing?
I mean, you could do both, right? Like, it would be a gamble to just be unhedged and just say that, oh, Elaine was on market to market and said beef prices would go up. So we don't know that that's going to happen. It certainly would be prudent to have some puts in place, something that you have your downside covered. But yes, I do feel that we might have justification to see some higher prices.
All right, Elaine Cub, a little bullish on the cattle markets. Let's talk about the feeder cattle market. Yeah. You work with a lot of cow-calf producers. Are you still seeing the herd expand this year?
Yeah, absolutely. Well, actually, I'm a little puzzled by bred heifer prices have gotten quite cheap compared to last year, 2 years ago. It's incredible. So I don't know if that's because there is not the demand for expansion that there should be. I think that absolutely, if we have producers who are willing and able and will have the facilities to be raising more calf crop, I think they should be doing it. Especially because looking at, like I said, people are making money. The feed yards are making money. It hasn't been a long time yet. It's only been a few months that they have been. But we could project out towards fall and hope to see some of those profits being shared on down the line through the industry.
Okay. So now you talked about the price of bred heifers being cheap relative to last year and 2 years ago. Are they cheap on a historic basis, or are they just cheap relative to that? I mean, $3,400 for a bred heifer was a very high price.
Yeah, and it's half that now. So, I mean, yeah, it may just be that we have grown conditioned to an extravagant price level.
Yes.
Yeah, hard to say.
Okay, all right. So now let's focus back on the pork market because we talked about that a little bit earlier. As things sit today, we're hovering right around $70 in the nearby. Where does it go from here, Elaine? We've had an incredible rally in this market. Aren't we, I don't want to say aren't we due, but is that market due for a correction?
Kind of. And I think we saw it a little bit in the futures this week. But you're absolutely right. That rally, if you look back from the start in late September to now, is a 32% rally. It's huge. So we're above 70 cents, which, you know, I suppose we should be. But I think it's gotten too hot too fast. I do think that seasonally we'll expect it to continue, maybe hit 80 somewhere in the summer. And we are seeing August futures contracts sort of aiming for that level. But I think so far, at this point, yeah, absolutely, there would be a justification for a correction.
Okay. And if we do get a correction coming off a 32% rally, what would you expect? Would it be 15% to the downside before we could maybe catch and rally back?
I mean, that's a technical argument, and
okay.
I don't know, but if you just look at the chart, there's not any really natural level where you'd stop. That rally was almost uninterrupted between September and now.
Yeah, and it looked like you wanted to say something else before I cut you off, Elaine. What were you thinking?
Well, just that we talked about the swine or the bird flu issue in China. That there is a lot of risk here, and that if you have an opportunity in a market where it's gotten too bullish too fast, those are good selling opportunities.
Okay, but with that bird flu risk, I mean, okay, so you're not willing to bet the farm that we're going to see a lot of increased pork exports to China?
Yeah, not yet. No, we know that we've received a gift from that rally. We don't know that the bird flu argument is going to push it any higher.
Okay, now you mentioned just briefly the dollar earlier on. Do you see it getting stronger here in the next 2 weeks?
Oh, in the next 2 weeks, maybe not. I think it's pretty well range bound at the moment. But long term, certainly that has been the indication from the Fed, from the economy, from everything, is that we've got to be prepared for that.
All right. Well, Elaine Cub, thank you so much for taking the time to join us this week.
It's been great. Thank you.
That wraps up the broadcast portion of Market to Market, but Elaine and I will keep the market conversation going, including answering more of your questions during Market Plus, which is available on our website. While you're there, follow the links to our Twitter feed, tweet us your commodity market questions, and we'll get you the answers during our market analysis and our Market Plus segments. And join us again next week when we'll explore how a key ingredient in a growing market is hard to price. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.